In today's video, I'd like to do a post-mortem analysis on a trade I had inside of AMD. I royally screwed up the management of this trade, and in today's video, I'm really looking to speak to more myself as a video trading journal, and I'm sharing this for those of you that make similar mistakes. Hopefully this video helps you as well to get out of that little funk that occurred, at least in my case, with AMD. Now I'll start first with showing you what the setup was, why I cared about AMD, and then I'll highlight what I think are the two big mistakes that I made when managing this trade. Now let's start first with understanding why AMD was on the radar in the first place and why this was such a good opportunity. Now AMD was one of the stocks which triggered on our stock volatility box live scanner. And not only did it trigger on the live scanner, it triggered on the overlap tab. The overlap tab is essentially the best of the best setups that we have. We look for hourly and daily volatility box breaches. That gives us this double confirmation where we know that, hey, the stock is extended. And we had the likes of AMD hit the scanner early in the morning, which is not really something that happens too often. Even if you take a look at some of the other stocks that triggered on the overlap tab as the day went on, you could argue AMD was one of the more popular stocks that folks like to trade. So that was the setup right off the bat here. AMD triggering early in the morning, telling us that, hey, there's a chance we might revert to the mean here inside of AMD, and we'll get a really nice opportunity for a risk to reward trade here. Now, if we take a look at the charts inside of AMD, the setup I was looking at should be a setup that I think most of you are familiar with. If you're not, I'll leave a link to the setup in the description box. It's a fairly simple setup in which we first look for a volatility box breach. We had that happen here inside of AMD. We breached not only the aggressive volatility box models, but even the conservative ones as well. So both daily models there breached. We have a high likelihood here of a reversion to the mean opportunity. Very much the risk to reward is skewed in our favor here. So that was step one. We had the volatility box breach. That part of our setup rules were met. Step number two, we were looking for these Keltner channel wedges, at least 5 of them, and we had way more than 5 of them plotting. Really, ever since the open, AMD was plotting these wedges, telling us that, hey, we're now outside of the 3.0 Keltner channels for quite some time. We're looking for a reversion back to the mean. So another confirmation here. Now, step number 3, we're looking for the edge signal, and we had that print right here once we had the oversold confirmation. And we had that followed up with our momentum cross as well, telling us that, hey, now the 3 EMA has crossed above the 8, we have momentum on our side. So at this point is where the trade was an entry for me. This was the first entry. Now, shortly after this entry, we had this take place inside of AMD, which took me out to a T. I was on the other side of 93. I'd given it about 10 cents of buffer, and we went to exactly that before price action reversed. So here was stop out number 1, and even then still pushed past it, looked past that trade. So I would argue that this right here is the hurdle in the first place, and I was able to jump past that. That wasn't really where I think I made a mistake here. Instead, the mistake came when the second momentum cross came into play right here, and I re-entered the trade. However, when I re-entered the trade, I didn't really view this right here as an independent setup. I started to really let this stop out get to my head, and I started to draw lines the way that I think most people do, where you talk yourself out of an entry. Specifically, the line that I had drawn was this channel right here. I connected the tops, and if I extend this a little bit to the right, and I redraw this as a channel, this is how I suddenly started to look at AMD, and I think I overcomplicated the setup, not really viewing the second entry as an independent trade, but rather letting the baggage of this carry on into this new entry right here. So as soon as price action started to rally, first off was that feeling of, okay, I'm glad I re-entered this trade. That's a hard thing to do in itself. We did a good job there. Then we started to see this red candle right here, and that came towards the top end of this channel, which was then followed up with this green candle right here as well. So it started to seem, at least to me, that this was starting to serve as a place of resistance. This is where I completely fumbled this trade, moved my stop up way too close, really not wanting to feel another loss here, and that was stopped out right here before the trade then, of course, ended up continuing. So I would argue mistake number one that I made was in this re-entry here, not really viewing this as an independent trade, completely independent from this first signal right here, but instead I muddied the two setups together, and I think that just led to a recipe of overthinking and a disaster which followed suit. You can see here, if I first zoom out, that AMD was a really nice winner, the kind of winners that I think come a handful of times every week. And AMD came on a Monday morning, almost first thing on a Monday morning, and I royally butchered this trade in terms of the management. Now, second mistake that I think I would argue that I made is not getting back in once we saw this green candle right here, where price clearly told us that, hey, we've broken past this resistance. And even then, this next green candle was further confirmation of that. AMD continued to keep going up. Then we had a little bit of a pullback. And the second entry right here, I would argue, or rather the third entry, if you want to call it that way, would have still been a nice opportunity to enter this trade. But at this point, the psychological baggage from really this first stop out, this screw up on the trade, and then knowing that the entry that I had on that second trade was pretty much close to that 93.50 mark, and now the second entry in this pullback here was near that 94 mark. So there came in your typical grocery store mentality of now you are overpaying for this trade compared to the original entry. And that too started to get in my head in terms of overcomplicating this trade, beating yourself down mentally, really beating yourself for mismanaging this trade. And that completely affected, I think, not only the management of this trade, but all the other active trade setups that we had as well. So I'm hoping in today's video that for those of you at least that were looking at AMD, maybe you had a similar experience, or maybe you completely managed this trade correctly and you were able to take advantage of this really nice move inside of AMD. Either way, my goal is for these mistakes to be shared so you know that it's something that happens, it's something to work through, and there's definitely learnings. I think trading is an ever evolving art that you need to get better at understanding your own mind, your own self, and controlling these emotions, which today I didn't really do a good job of. So one more time, the two mistakes to sum up, at least for myself here. Mistake number one, not really viewing the second trade independently, but instead muddying up that first entry and letting that cloud the judgment in terms of managing this trade. And then the second mistake I would argue is once we knew that, hey, this is not really serving as that resistance, AMD is showing strength, showing more strength than we would expect. Very easy to see this bull strength here after the fact. And even in the moment, I think it was easy to see that, but letting that grocery store mentality is not really a healthy way to manage this trade. Now, for those of you that were using, say, the 5-minute time frame chart, which is another chart that I was looking at, the 5-minute chart here made this trade, I think, a little bit easier to deal with some of those mistakes. The 5-minute, we had the same volatility box models breached. We had the same wedges plotting. We had the edge signal. We had only one momentum cross here, a little bit cleaner, and way less heat on this trade compared to trying to be a little bit more aggressive on that 2-minute. So keep in mind that is a trade-off that comes with the 2-minute time frame chart. The 5-minute allows you to be a little bit cleaner, but that 5-minute entry here was, again, near that 94 mark compared to where that 2-minute gave us an entry that was better by about 50 cents, but of course led to the mistakes that we've talked about today. I hope you find this video useful for those of you that maybe had a rough day of trading or maybe you made some of these silly mistakes. Know that there's the rest of the week to really improve upon this, learn from these mistakes, and make back not only what we lost here, but more than that as the week progresses. Take care, everyone. I hope you found this transparent video to be useful. Good luck trading the rest of this week, and I'll see you in the next update.